With growing investor activity and interest in the Asia loan markets, this is a quick snapshot of a Chinese loan structure called Nei Bao Wai Dai. Credit Suisse is actively involved in this scheme, which generates various opportunities for investors to participate in China's burgeoning loan market. In general, offshore investors can expect a return of around LIBOR plus 1.3% for standby letter of credit-backed loans by the Big Four Chinese banks for a one-year tenor.
Nei Bao Wai Dai is a Chinese term to mean onshore guarantee for offshore loans. This is a government policy to allow onshore corporates to transfer liquidity from onshore to offshore relatively quickly. China still has capital controls, and capitals going in and out of China remain subject to regulatory approval, which often takes time. This policy allows both Chinese companies easier access to funds to expand overseas and foreign corporates with retained earnings in China to better utilize their liquidity globally. The typical structure is as follows. China onshore corporates will deposit cash in CS Shanghai entity as a form of a cash pledge. Shanghai entity will issue a standby letter of credit to CS Singapore entity. On the back of the standby letter of credit, the CS Singapore entity will extend the loan to the offshore affiliate of the onshore corporate. There are some regulatory requirements on the use of the offshore loan. Among others, the loan must be used for offshore purposes, and the loan proceeds must not be used in China directly or indirectly. There are several advantages for the offshore borrower to use this structure. Transfer of liquidity from onshore to offshore relatively quickly. The process is efficient and straightforward without regulatory approvals. Depending on certain market conditions, some corporates are able to enjoy a relatively high deposit rate onshore and still borrow at relatively lower rate offshore. Over the years, the Nei Bao Wai Dai structure has also evolved, and there are new variations to this structure. Instead of a cash pledge onshore, corporates can also pledge bonds to CS Shanghai entity. We can also work with other local Chinese banks where they will issue the SBLC directly to the CS Singapore entity, and the CS Singapore entity will consider lending to an offshore corporate on the back of the Chinese bank's credit. The local Chinese banks are also better equipped to take on a wider variety of assets, which can include real estate properties and stocks or other illiquid assets. For the overseas investors, this creates a good investment opportunity to participate in China loan market as the CS Singapore entity accumulates a portfolio of SBLC-backed loans, and it can be offered out to the following structures depending on the different investors' risk appetite. A direct loan purchase, total return swap structure, either partially or fully funded, repackaged SBLC loan, where the underlying loan is sold into a SPV structure, and the SPV will issue CLN referencing the SBLC-backed loan.